Mr. Lockhart, don't know if you had a chance to listen to Larry Kudlow, of course, from the NEC. Still suggesting economic growth here in the U.S. will be fairly strong. What's your view in terms of the overall impact, knowing, of course, how uncertain everything is right now in terms of the virus and its impact in China and on supply chains and economies around the world?
Well, I agree with both Jim Bullard this morning and Larry Kudlow that first, it's a little early to tell, and it's a wild card factor. But I think we should not panic at this stage that it's going to have a major impact on the year. I think the Federal Open Market Committee members are likely to look through this unless the evolution of this is very, very severe. So I'm in general agreement with Bullard and Kudlow both.
And again, in asking Mr. Kudlow about the move in yields on the 30-year in particular to all-time lows, he suggested safe haven. Yeah. Are yields telling us anything at both the 30 and 10-year level right now, given how low they are?
I don't think they are signals about the economic future in the country. I really do believe these are the result of capital flows into the dollar being extremely strong now. And you can imagine that investors around the world are trying to seek a safe haven, to use that term. So I agree with Larry Kudlow's view on that.
What are you watching closely to try to determine perhaps if there is going to be more of an impact or a way that we can actually foresee what the impact will be on the U.S. and world economy from the growth of this virus?
Well, I see three channels, if I can take a moment. The first one would be that the disease actually comes to the United States and is virulent enough that it affects our workforce, and we get a mirror image of what's been going on in China. That would obviously be a very serious development, but the indications of that at this stage are very, very small, and so I'm not too concerned that we're going to see a true epidemic here in the United States. So then you move to the supply chain effect and the export channel effect. Supply chain, mixed indicators. There's a lot of anecdotal feedback that supply chains are being affected. And, of course, you had the Apple news last week or earlier this week. But, again, I think it's a little early to tell that the supply chains are going to be disrupted enough to have a sustained effect on the U.S. economy. And then the export channel, yes, likely some effect on exports to China. But I would say, fortunately, the motor of the U.S. economy is domestic consumption, and that is a very benign picture at the moment. So I can't get overly aroused about exports taking a hit.
Dennis, as we're talking, this happens a lot. President tweets in all caps, says if our formerly targeted farmers need additional aid until such time as the trade deals with China, Mexico, Canada, and others fully kick in, that aid will be provided by the federal government, paid for out of the massive tariff money coming into the USA. Again, with the caveat that we are in early days, how much of this is unwinding the presumed effect of phase one?
You know, I don't have good information on that. I would assume that just as phase one was coming into play, the Chinese were hit by this, and it's going to affect their imports from the United States, and therefore a lot that was promised will not be delivered, at least in the short term. That would be my working assumption at this stage. But we'll see how long this virus affects Chinese demand, but the principles involved in phase one will probably be met if we just give it some time.
And also, while we're talking, Brainerd is on the tape talking about potential tools if rates go to the lower bound. In this case, she mentions yield caps specifically. Do you think the Fed is going to need to reach deeper into the toolbox, given what yields are saying about potential growth?
Well, I think Lael Brainerd and others have been looking at let's say, the odds of hitting the lower bound again in general and somewhat theoretical terms. That's not a forecast of where the economy is headed. The FOMC naturally is doing planning for various contingencies. When and if that happens, I would think they would resort first to quantitative easing and then conceivably some form of forward guidance. And rate caps are one tool. They need a robust set of tools because the conventional wisdom today is that the tools they have are simply not that potent when you're starting at a low interest rate environment. So I'm pleased to hear that there's a lot of discussion going on about what could be done if we ended up at the lower bound again.